Our next presenter is Roy Swanson. Roy just did a webinar with us for a couple of weeks ago, and one of the things that was kind of incredible is how many people wrote in to say how much they liked it. So, which isn't unusual, but it was unusual to get quite that many people actually coming in to say they really enjoyed his presentation. So you've probably seen, if you've been a part of our database for a while, you've probably seen Roy present before. He always does a really good job, and we're going to go ahead and turn the time over to him. Let me go ahead and bring him on. Roy, can you hear me okay?
Yeah, can you hear me, Jeff?
Like an angel.
Great. I have a new Bluetooth headset.
All right, very good. I have got, I just pushed control over to you, and I can see your screen, but it's blank.
Okay, good.
Okay,
Let's pull this.
you're
Let's
like,
pull this up.
because it's
Well,
blank.
thanks for the props, Jeff, about the last presentation. I'm basically going to do a very similar one today, and we better get moving because a lot to cover. It's about trade triangulation, and it's a strategy that we've developed here using MetaStock. I have to run the disclaimer, of course. You've seen it a million times today, but it basically says we're not brokers or certified financial planners. All the results are illustrations based on simulated historical trades, and past performance on this or any trading system is not indicative of the future performance. So a little bit about me. I'm the founder of a website called steadytrader.com. I've been trading about 20 years. Actually, when I started, I was requested to work on the first derivatives back at DL&J, if any of you remember them. I think they were bought by E-Trade later, but back in '99, who knew what derivatives were? I didn't either, so I didn't do it, but I did go on to consult to many trading system providers, and know the strengths and weaknesses of a lot of systems. When I decided about a year and a half ago, I I decided to build a system in MetaStock because MetaStock, as Jeff said, is just known as rock solid, and it really gives you everything you need. Really everything you need to do to trade, and a whole bunch of different indicators. So we're going to talk about today's agenda. We're going to talk about how to scan for buy signals, and there's three components to this process, I believe. One is to set the right goals. A lot of people just think, oh, my goal is to make money trading, but really we've isolated it into a few components of the goals. And then about using corroborating indicators, and that's where the triangulation comes in. And the third thing is that we'll talk a little bit about decision theory and why decision theory supports this type of trading. At the end, I'll tell you how to get a copy of our book. It's an e-book. Read this first. Okay, this is almost an even money market. If you're engaged on a daily basis, the crash, it almost didn't exist. I mean, I'm being serious about this. There were so many days where you could make money, so many 2 or 3 days where you could make money, but it was important to engage on a daily basis. Again, this is the market as it is. It's moving fast. So let's get on to the time horizon. Now, if you're active every day, well, it's kind of obvious. Shorter is better. And the history is behind us on this. I think a lot of people know this. 1960, the average hold was 8 years. In 2014, it was 5 days. And professionals, which are driving probably 90% of the volume on the market, it's minutes to seconds. The reason shorter is better is because you avoid corrections. Think about it. If you're always pulling your money and putting money in, pulling it out, pulling it in, pulling it out, think about the pulling it out part. You're always pulling out some of your account every day almost. So if there's a correction, guess what? It can't do too much damage. And the market, the way I look at it now, it's making a mini correction every couple days and sometimes every couple hours. So shorter is better. Finally, getting into gain targets. Well, if we're trading the market as it is and we're looking at short time horizons, we can't be looking for those 30%, 40%, 150% gains. It's modest gain targets. We like 1 to 5% because they're always available. You're only using short holds, short positions. There are no long run-ups anymore to speak of. They're the aberration. They're not the normal. So setting gain targets in a modest way, it really makes a lot of sense, at least from our perspective. Now we're going to get into the triangulation. When we decide to build a strategy, we call it the green light strategy, by the way. And it's basically about trading through what I call this never-ending cycle of profit-taking pullbacks. So the strategy involves short, quick price moves. 2-day average hold. It's not really day trading, but I wouldn't call it swing trading. It's getting in and out pretty quickly. It's kind of a new hybrid, really, between day and intraday trading and what people think of as swing trading. The average gains, again, they're modest. They're in that, as I just said, 1 to 5%. We're actually getting about 3.8% gain per trade. The accuracy is key to trading like this. This strategy has an 81% accuracy, and that's due to the triangulation. So we're going to talk now to the meat of this presentation, which is triangulation. The power of three, I call it. We've known this for centuries, ever since the first navigators. We're trying to figure out where they were on planet Earth. They've used triangulation, 3 points on the horizon, 3 stars. The astronauts in that movie Apollo 11 with Tom Hanks, their computer went down, they're up there and on the way to the moon, and they looked at 3 stars and figured out where they were. Triangulation is also used to make decisions when you think about it. We often want to get the pro and the con and then one other vote to make an actual decision. It's also been used for centuries to make judgments. Think of the concept of a tribunal, a court with 3 judges. See, the thing is why 3? Well, 2 leads to indecision. 2, you're going to get 1 for and 1 against. So how do you make a decision? Well, you can't. And if you're using 2 indicators, you get 2 indicators, one's good, one's bad. How do you make a decision? When you get above 3, the problem is there are too many parameters. You get too few choices. You throw 4 indicators into the pot, you're going to get very, very few executions. So again, 3 has been used for centuries for all kinds of important decisions, whether it's in the courts, on the high seas, or just making business decisions. So we decided we were going to look for 3 appropriate indicators, and we wanted them to be based on the modern market to help us find short-term moves. Now, when you look around at indicators, we do have, again, a very strong point of view on a lot of technicals, and that is that they trade the old market. They don't trade the market as it exists today. And when you look at when they were developed, like candlesticks back in the 18th century or the Elliott wave back during the Great Depression, even RSI and Bollinger Bands, these are all way before the new market that's emerged basically since the days of online trading. So when we decided to start this, we decided to start with RMO. Of course, RMO is a big favorite at MetaStock, and with good reason. RMO was developed just in the early 2000s. I think it was 2005. It's a modern market indicator. The research all comes from the new market in the days of online trading, high-frequency trading, dark pools, and all that. RMO, the research that went into developing it, came from that context, so we feel it really works well. Now, when you look at it, here's just a real quick basic RMO chart in MetaStock and the buy signals. You can see that, like a lot of indicators, it's pretty good, but it operates over a long time frame. Here you see it's November, December, February, March. You've got a couple of months in here. These are several week trades. We didn't want to get involved in that because we had a goal. Remember, our goal was to get in and out, to be active daily, to have short-term holds. So we start with RMO because it's an exceptionally accurate indicator. Then we tighten up RMO. I think of it like squeezing it into a shorter time frame. We use it in conjunction with Wilder's, the Wilder's measurements you can get in MetaStock on the ADX, the PDI, and the M and the I. And we get trades like this. They're like squished RMO trades. And I'll just show you a couple because they all basically look the same way. We have a rule, 5 days and out. So here's the RMO signal, but when we filter it with the Wilder's indicators, we get these short trades. So you got the signal, bang, you're in the next day. The second day, you're up 7%. You can see it's a short-term trend. It really only lasted a few days. We got in once the trade really started showing itself to be real. By the 4th or 5th day, it's already flat. Maybe you get 5% instead of 7%. But it's basically, it's a squeeze on the RMO. You're in, you're out for a nice gain that we think is a nice gain of 7%. Here's a much better trade. This was a bear fund on the 19th of August. I think it's a China inverse 3x leveraged ETF. Again, you can see it's flat going in. We get our signal, and bing, 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 4 days, 37%. And after the 4th day, trend is over. These trends do not last long. It's about getting in and getting out. And again, the RMO plus the Wilder push them together. Here's another one from just a couple weeks ago. AGYS, we get the signal, and you can see it was doing nothing ahead of time. And this was one of the signals without using our double system. Actually three, but I'm just showing you the effect of the right now the Wilder's equations on this to get it down to a 3-day view. So you've got the signal 1, 2, 3, 4, 5. We had a nice 17.5% gain on this, and the trends start to flatten out. So the final triangulation, we've got RMO, we've got the RMO short-term trading, and we set that basically to a 3-day look. Is what we call order book buying pressure. We're big believers in the fact that, look, buying pressure is what sets the prices, right? I mean, at the end of the day, trading 101, the order book is what determines the price. So MetaStock has this thing called the on-balance volume indicator, and we just drag that onto the graph. Once we charted out using the RMO and the Wilder, and we've got our buying signal, we bring in the on-balance volume indicator to support the first two indicators. And you can see when the on-balance is steeper, the steeper the curve here, the better. So here it was a corroborating signal. And again, looking at the same trade, AGS, you can see that the buying pressure was right there. It rides along with the trend and with the trade. Now, the important thing is that we wanted to see that this buying pressure increased the day prior to the signal and the day of the signal. So when you're actually seeing this in real time, you'd be seeing this day and this slope here, which is a nice steep curve, what you're looking for. Here's another one, the buying pressure again. And you can see we've got this buy signal. This is just from a couple of days ago. We had a 12%er in 3 days, 12% trade. Here's the RMO signal, and you can see what we were looking at that time was the buying pressure. You know, it was just sort of not knowing what it was doing here, but bing, it went up like this, really steep, closing in on vertical. And we saw that in conjunction with the two indicators, the RMO and the Wilders. And we knew that was going to be a good trade, basically, and it was. So this is basically what we're doing with Greenlight. We're using RMO, Wilders to get it down to compress it, to get the stronger RMO signals, and then final corroboration with the on-balance indicator, or what I call buying pressure, because that's really what it is. Here's one more, just from a couple days ago, just to show what we do when the markets are down. This is another one of those, I call them bear funds. It's an inverse leverage. Oh no, sorry, this is the Energy Bull 3X. We do a lot of work with 3X ETFs. And again, energy hasn't been a favorite lately, but when we ran the scans, when we ran the RMO with the Wilder, with the buying pressure, we got the signal here. We could see that the buying pressure had really supported the signal, and again, 2-day trade, 16%. So it's pretty simple. There's a little work involved. You got to run the 3 indicators, but here's why it works. When you make the right decisions and you have a big decision, you've all heard this a million times. You break it up into multiple small decisions, right? It's the law of compensating errors. You might have 1 or 2 small decisions be wrong, but 2 or 3 or 4 or 5 of those small decisions are right, and at the end of the day, your big decision is good. You're also using a triage process here. We're prioritizing, we're making it sequential and selective filtering. So we start with the RMO, we go on to the Wilder, and then we finally do the on balance. 1, 2, 3, they're in a priority. The RMO is first, the Wilder is second, they're in a sequence, the buying pressure is third, and selective filtering, 1, 2, 3. Now, here is an interesting chart. This shows you how the 3 indicators support each other. And as I said earlier, a lot of people just throw indicators together. But really, indicators have to support each other in terms of their strengths and weaknesses. So RMO, the only weakness we saw in RMO was that it was medium term. Otherwise, it's good, but it's very simple. It's kind of an up or down indicator. It indicates a buy or it doesn't. And it's based on complex math. If you've ever looked at the formula, there's a lot of lines to that formula. The Wilder is a simpler formula. They're basically based on shorter term moving averages and things like that. So with shorter term, it squeezes the RMO, but it also rates the strength You know, RMO, that signal that you get at the swing trade buy signal is either up or down. You know, it's either blue or red. This gives you numbers that give you the strength. Is it strong or is it weak? And is it growing or is it weakening? So it's adding to the intelligence of the RMO. And then the third one, the order book, is immediate. It just shows you, sorry about that, it just shows you what's happening right now, tonight. What does the order book look like? So this really rates the strength. There's really not much of a formula to it. It's more of what I call a direct measurement. So you see how these are all different: medium term, short term, immediate. So you're ratcheting, tightening up on your time frame. You know, you're going from a simple up-down signal to signals with basically an indication of strength, whether it's growing or shrinking, and you're going from complex formulas more to direct measurement. Again, each of these indicators does something well, and they support the other. They fill in the gaps of the other indicators in this triangulated group. What about August? A lot of people say, what happened in August? We had the best month of the year in August, and it was all signaling these 3x leveraged ETFs. And you can see these trades, not indicative of what we normally get. We're normally getting trades, 4, 5, 8%. But in August, this thing went bananas because the indicators, the volatility was there. That was the most volatile month we've had, obviously, all year. And the system really picked up on those inverse 3x ETFs. Just want to talk a couple minutes on money management. With a system like this, you're looking at trades every day. And again, signals are half of trading, money management is the other half. We teach with this strategy a quick cycle portfolio strategy, cycling your money in every couple of days. Remember I said 2-day holds on this, so we're looking at scans basically every day, putting money in basically on average for 2 days, sometimes as much as 5 days, and quite a few are coming in and out the same day. But anyway, cycling them in and out every 2 days. What this does again is, as you can see, remember I said you're always taking money out, so a good chunk of your money is always out of the market and getting ready to go in the next day. If you had a $25,000 account, which is what this is spec'd at, you can see Monday, Tuesday, Wednesday, Thursday, Friday, you're basically cycling through that whole account in 1 week. And in a month, you're going through your account 4 times. You're working the money hard. You're working the money really hard, and that's why it all adds up. We do teach this system. It is based totally on MetaStock. If you are interested, the system comes with all the instructions, how to validate the signals, how to manage the portfolio, how to run the triangulated scans. We have daily scan room videos where you can actually watch us do it. You can see us running the triangulations, and we also publish the signals to verify that you're trading it the way we teach it. This is what the portfolio looks like. This is our model portfolio for this year. Again, as I said earlier, this is not trophy trading. This is consistent trading. Average ROI in a month is 8%. Of course, this year, that's pretty tremendous compared to what the market has done. The year-to-date is 81% on the ROI. You can see the net gain per month. It's bouncing around this 8% average number. It is spec'd on a $25,000 portfolio because we trade so often that you've got to stay clear of the 3-day rule for day trading that most brokers, or I guess federal law actually says you have to have $25,000 in the account. So we've spec'd it out for that level of account. You could always scale it up if you want. But again, this is about consistency. This is about basically having positive results every month that really add up over the course of the year. You can see we're probably, it's hard to believe we wouldn't double by the time we had 2 months into this year. So that's the presentation. I wanted to leave plenty of time for questions. Everything is at steadytrader.com. That's our URL, so please copy it down and take a look. Don't Google it because there's a guy who calls himself The Steady Trader, and that's not us. We are steadytrader.com. If you go to the site, you'll also can pick up a copy of our ebook. Read this first before you buy stock. This talks a lot about, again, the decision theory and the structural market theory that went into developing this strategy. And once you read the book, you'll also understand how we develop those goals for activity, for time horizon, and for gains, and then why the indicators, those 3 indicators that we use, really support the research that came into the book. I'm going to start looking at the questions now. How long to trade? 2 to 4.5 days. What is the exit strategy? That's a good question, and let me just put this up so that people can take this in terms of if you have questions that we don't get answered now, just shoot me an email or give us a call during the week. We're always ready to talk trading, and there's our website URL. So exit strategy, you know what? We actually don't believe in exit strategy. As I said, I've consulted for close to a dozen years for different trading system providers. Exit strategies are kind of like the greedy man's promise. People want to know, well, when do I take my gain? And this is why we set modest gains. In our opinion, if you have a plan and your plan says, well, I need to make a gain of whatever it is, 2, 3, 4%, when you hit that, you may as well take it. There's nothing better than taking a gain when it exists. So basically, you could see how short these trends are. Again, they're almost always a 3 to 5 day trend. When this thing stops moving up, it's time to get out. So setting alerts, it does require setting alerts, and as soon as the price starts to dip, just get out of the stock. Again, we're not big on holding on. This is about getting in, getting out. Run the trade for day, 2, 3 days, whatever it is, but the second that thing starts to fall, hopefully your broker, my online brokers have it, it starts to lose 0.5% or something, just, set it to sell. Do we trade indexes with the system? Occasionally they'll pop up. They are in the list of issues we scan, but generally it's the 3x leverage, like the SPXU, the 3x leverage on the S&P or something like that. We've had some good trades on those. How many trade signals issued in an average week? We're getting about, it's been up and down depending on how the market works, but basically it's something around a dozen signals execute a week. You're looking at about a dozen trades a week, and you're looking at anywhere from 40 to 60 signals in a month. So something like 15 or so, 15 to 20 signals. I'd say more like 20, because the execution rate on a strategy like this is really somewhere around 65%. A lot of the signals don't execute. Again, this is a volume-based strategy. It's about generating the signals, putting out the orders, and then like I say, 2/3 of them will execute, and then the rest will just not execute. You don't make anything, don't lose anything on them. Let's see, the questions are pouring in. Can you start with just 5K? You could start with that, but the thing is here's the thing, and this is the thing about almost any trading system. This trading system is going to give you a few signals a day. Well, the research is based on the entire portfolio. When you have a small account and you have to cherry pick, you're only going to trade maybe 1 or 2 signals a week out of the 15 or so that are generated. Who's to know you're going to pick the winners or the losers or the ones that don't execute? Cherry picking ruins the hope of getting the published results on any strategy. I don't care what the strategy is. Unless you've got a strategy, that just gives you 1 signal a week or something, and then I think you're getting back down to trophy trading. It's like, oh, I'm going to bet the ranch on 1 signal a week. So I don't really, I could advise paper trading it, to take a look at it. But again, with $5,000 on a trading account, you would have to reset some of the parameters in the strategy so that it only signaled very little. Nice music. I don't have any music. MetaStock comes with RMO. Yes, everything here is basic MetaStock. It's the Wilders stuff in MetaStock. It's the swing trade buy arrow. It's all from basic MetaStock. It goes back a couple versions. There's really nothing fancy about this. We just set them up as sequential explorations. We tweak a few of the parameters again to squeeze it up to get. It's basically about really just tightening up on that RMO and getting those short-term pops. How is RMO indicated? I don't know. I am not like a PhD in biomathematics. What I know is that I've known for years that MetaStock is an amazing tool. I've known for years that MetaStock has has talked a lot about how good it is. And then a couple of years ago when I started developing this strategy, I said, you know what? Let's see. And again, this is a new way of using it. It's not the way that anyone at MetaStock teaches it, but I will tell you, I have a lot of confidence in RMO. And my position is this. Look, I use MetaStock because it does all the math, because it's a great tool. I'm not a quant. I am a math geek to some extent, but I'm not a quant, and I don't have time to be a quant. So I set the things up in MetaStock, I push the button, I get my signals, and then that's basically it. So why is it better? I don't know. Is it better? I think it's doing a great job. How much of the 25,000? The strategy, good question, is spec'd at $2,000 per trade. So again, you're looking at with the average gain of making maybe $50, $60, maybe net of $10 commissions, you're making $50 a trade. But because there's so many signals and so many trades a month, it basically adds up to a great ROI. But again, I talked about this at the beginning. I'm into consistent wins. Base hits win the baseball game, and we don't want to bet too much on any one trade. It's really taken from we're taking a few pages out of what professionals do. They never go all crazy into one big trade. It's always about safety in numbers. Never thought of this perspective on the markets. Well, thank you. We do think we're a lot different than a lot of systems out there. Equally well with real-time data. We use end-of-day data, again, just to keep it simple because we want to develop a strategy that anyone could use. I think the real-time data would be great for this because you could actually tighten it up. You could tweak the parameters of the system with the rules to actually do some day trading with this. So I think that would be just fine. And in fact, if you are this disciplined and want to get up early in the morning and run that real-time data, in real time before the opening, there's no doubt you would get better results in my mind. Not that I've proven this, but let's face it, we also read the same articles. Most of the gains are happening in the overnight. So the closer you can get, to running your scans to when you get your signals and place your orders, the better off you are because this is a fast-moving market. It's a fast-moving planet. Where is RMO explained? There's stuff on, you can Google it and see there's kind of quite a bit about it. MetaStock has had probably dozens and dozens of videos on it. The cost of this strategy is $289, and you'll see that at steadytrader.com. That's all in and unlimited access to our scan rooms to learn the strategy. I would say it takes probably take you about 2 weeks to really get good at it. I mean, like anything else, this is about you're actually learning something here. Does it work with Forex? I think that's a good question. We don't specifically trade the Forex pairs, but it's something I've been really wanting to get into. We only trade ETFs and we stick with the leveraged funds so that we actually get a good bounce. I know that there are some, occasionally we get a scan on one of the leveraged ETFs that work on a currency pair, and we've had a couple of good trades like that.
And it is a one-time cost. And I'm gonna start to play you off, Roy.
Okay, yeah, I don't have my clock. I'm on full screen, so I can't see Jeff. I've just been going down the questions.
No worries.
Thanks, everybody.
If you guys have, I know there are hundreds of people here still, and thanks for coming. By the way, if you have questions that we didn't get a chance to answer, give Roy a call. He's got people you can talk to at 805-391-4440 or 4440, or drop him an email at info@steadytrader.com. Roy, any closing comments?
No, you got it, Jeff. I want to thank you for your warm introduction, and I'll just say again, I'll give MetaStock a lot of props. I've been in this field for close to 15 years or so. When I decided to build this strategy, there was no choice. We're going to use MetaStock as the tool.
Cool.
And I think I've given you some indication of why during this presentation.
Awesome. Thanks, guys. Thank you, Roy. All right.
Okay.
Looks like we got one more presenter to go. So let's go ahead and kind of get in there. A quick throw out to technical analysis of stocks and commodities. Again, a big thank you for them for sponsoring today's event. If you don't get their magazine, you should. And if you try my product, you can for free. So I know our phone lines are not as busy as they were before. Just good to hear we're catching up on all those calls that are coming in. We have some great bonus offers again on all of the add-ons. Thanks for all of you that have purchased already. And again, if you want to call those guys, the phone number to reach them at is 800-882-3040. And that's obviously the 800 number here in the US. If you're from overseas, you can come into us at metastock.com/sales chat. Let's quickly go